Okay, guys, welcome to the Day Traders versus the midweek review for February the 4th, 2026. It's Wednesday night, and today I want to go over a couple of things just about like it's kind of for the newbies and just not for the newbies so much, but just to maybe reiterate some things about how we look into our trades and what that looks like as far as our morning routine, and just, kind of walk you guys through the whole process that I take when I'm looking to get in and set up my trades for the day and for the next day. That's something you guys want to go over today?
Yes, please.
Okay. Somebody said yes. I don't know who else want to do this.
Yes,
But
yes, me too.
okay. I just thought it'd be a
Yes,
good
yes.
idea. I just thought it'd be a good idea to just kind
Yeah,
of just so you can see my thought process and like how I make my decisions and what that looks like, right? So the first thing I'm doing is in the morning, it actually starts the night before, right? And the night before or at the end of the day, I'm usually marking up my charts so I can get an idea, like right at the end of the day, like I want to know what that last 1 hour candle and the information that I'm going to get out of that last 1 hour candle. Like, so I want to know like how did the day close? Like where was my new PD arrays form? Where's my last did I take out a daily low or did I take out a daily high? Did I sweep liquidity or something like that? So I'm marking those things off, right? That's the first thing I'm doing. And that actually happens the night before, right? Then the next thing I'm doing is going into the day, right? Into the new day. The first thing I do in the morning is I go to CNBC. It's the first thing I do. And, you know, I want to know, wrong place. I want to know if there's one thing that I'm actually looking for in the morning, right? And that's usually the headline story, right? And that headline story is gonna usually be this first thing you see at the top, or you'll see a red banner at the top of the page. And this one's an old school habit that Kim taught me. And what I'm doing is, I think she uses Bloomberg. I like CNBC for my news, right? But this US market story is the first story that's going to be available. You'll see it flash across the top of the screen. But this is the first thing I'm doing, right? I'm going through and I'm reading this story. And usually a lot of times I haven't even gotten out of the bed yet and I'm reading this story because it's giving you the first insight as to what the market's kind of already leading to, right? Whether it's going to be like some kind of if you already got things you need to key up on and pay attention to. And the first thing about this is the title itself, right? The title itself already gives you information and it gives you things that you need to key in on, right? So in this particular case, S&P futures rise after latest earnings. Traders wait Alphabet results, live update, right? So, what is the first thing you get out of this, right? The first thing you get out of this is, and this is the after hours review, right? So, this is after the market close. The first thing it says is futures are rising, right? That gives you some type of sentiment already, right? And that says, hey, after the close, in the after hours, we're in London. I mean, we're in Tokyo and Sydney session. The market's already starting to give some kind of direction to the upside, right? Then we're going to read further into it, right? Now we get to see, okay, in particular, S&P futures rose Wednesday night after the latest corporate earnings, with investors weighing on Alphabet's results, right? So this line right here gives you a lot of information in this particular line. This is basically telling you that, hey, we need to focus on tech stocks, right? On heavier stocks, like the heavier tech stock results are driving, or what they consider to be driving the market up, right? Then you have details about S&P, NAS. They both climb 0.2%, 2.9%, 0.45%, right? This follows a major sell-off in software stocks that drove S&P to a second straight day of losses, right? So the cause for this is that software stocks, tech stocks, those are driving the downfall. What usually happens when we see software and tech stocks fall, you have a bigger fall in Nasdaq, because Nasdaq is made up of tech stocks, right? So that's why you see that's why you see this as being a very important for us to consider, right? Then you have, it's going into the tech stocks that's causing the falls, right? We don't have to read all of this, but you have Alphabet, you got Nvidia, Broadcom, Qualcomm, right? Qualcomm slid, right? Alphabet shares were last down 1% on Alphabet, right? What else? The Nasdaq slid 1.5%. Dow lost 260 points. Here's some key pieces of information. Software stocks were pummeled as fears of AI disruption in the industry had investors rotating out of technology in masses. So that's another key piece of information, right? Then okay, cool. Great. We got a lot of information just out of the first paragraph. This is just talking about Fed Governor Lisa Cook says progress on inflation is essentially stalled, right? Big information, right? A lot of information. We don't have to go into details to read this, but this is one of the Fed chair governors saying that progress on inflation has stalled. That means that we don't have help from the feds to lower inflation right now. So everything that they're doing to defer to defer the inflation that we're dealing with is on pause right now, right? So we don't even need to go any further in that, right? Then networking and tech companies, okay, that's cool. We already know about what's going on with them. Pharmaceuticals, more earnings for Thursday that we need to be considerate of, right? No big names right now, except for Amazon, right? We know Amazon reporting, right? So now we already kind of got a map to start the day with, right? I'm doing this the first thing in the morning. Like this is the first piece of information to kind of tell me what's going on with the day. Then of course, I'm just touching bases again on Forex Factory to just make sure nothing crazy, nothing that I need to look out for that I'm considering on the news, right? On the economic calendar, right? And again, I just want to know what kind of news do I need to look out for. Today, in our case, we had um, we had the ADP, which is the private sector employment changes. So they were expecting 37,000 jobs to be added. Well, I'm sorry. Previously they added 37,000 jobs. They were expecting 46,000 to be added. We only added 22,000 private sector's jobs to the economy. This is a bad miss, right? So going into the market, I already have enough data to have somewhat of a bias, right? So I already have details about the night before, where the night before on the in our market, right? We sold off yesterday, right? And we sold through a bullish area, right? There's a bullish fair value gap right here, right? So just from the information that I got on the charts, right, going into the day, I know we got a bullish fair value gap on the 4 hour that we traded through down here, right? And I know we sold off yesterday, right? And I know we sold off hard. So if I'm looking at yesterday, we had this is our high. If I'm looking at today, I got this is our high, this is our low from yesterday. And the first thing I'm asking myself is if this is the open, right? And let's do a replay, right? This is the question I'm asking myself at the end of the day, right? Going into Tuesday into Wednesday, right? Because that's what I'm referring to. Let me close that out one time. Leave. All right. So going into Tuesday into Wednesday, this is how I'm looking at it, right? Okay. So the night before, this is what my chart looked like, right? This is Tuesday night. I'm telling myself, okay, the market closed here. This is a swing high right here. This is the last swing low right here. This is the previous day low as well, right? If we sell off, I know that there's also a little small fair value gap and there's a yearly low right here. So if we sell off, it's going to at least tap this and it makes hold right here. And then that means we're trading back down below this fair value gap. And I'm saying, okay, we could likely sell from there, right? And if we do sell, it's going to need to take out this low, and it will likely take out this low if we sell from there. And if we
Or
get below these lows,
your
we could
screen
Well,
is
your screen is
black.
up.
Black.
what's that?
Your
The
screen is
screen,
black.
the screen black, Corey.
God, bro, man.
Need a cooling fan for that laptop, man.
I guess so, man. I don't know what is going on with this, man.
There was pen editing tool was there, but only that chart was not there.
Okay, hang on.
Mhm.
This is sorry, man. I'm the computer guy, and my computer acting up.
I mean, you've been trading like crazy. That would sound like to me.
um, man, I wanted to go in on this session too. I ain't even gonna lie. Let me see. Know what I'm gonna do with my first payout? I get off these new accounts. It's going to Apple Store.
Let me know.
Okay, how about it now? Y'all can see the screen?
Yeah, yeah.
Yeah, we good.
All right. Okay, so
Can you back it up to when you was talking about you was looking at the yesterday going into today?
yeah, I'm there still. Yeah, I'm
Okay.
there still. So again, like, so this is the close from Tuesday, right? At this candle. This is the 1600 candle when the market closed. So when I'm looking at where my projections are, right, and I'm thinking about what could happen the next day, right? The easy win you can get off of looking at this is, am I closer to the high of the day yesterday, or am I closer to the low of the day yesterday? Easy question. I need a response.
Low.
Right, right. I'm closer to the low. So is it more probable that I would ever trade back up to this high, or would I take out this low first?
Take out the low first.
Right. Okay. So now again, I got a thesis already been building, right? I got this little short-term high. I got this low right here. And I do think that this this high right here could get taken out because we close near it, right? So in my head, I'm thinking like, okay, we should probably push up and then reject, right? And that's I always tell y'all, if we get the 0 to 1 move, we could reject from there. Or if we get the 2 to 3 move, we can reject from there, right? I always tell y'all that because that's always a possibility that on our 0 to 1 move, it could reject from there. And then the other thing is the 0 to 1 and the 1 to 2, anytime you get these moves, this is just an estimate, right? It doesn't have to go all the way to where I'm projecting it. And it also can go past where I'm projecting. But this just gives you what the charts is telling that it could go to, right? There is a bearish array, PD array right here. There's a bearish fair value gap right here, right? So when we get in a bearish fair value gap, we could be selling off at the low, the middle, the high. We can sell off at the quarter point here, right around here. We can sell off at the quarter point right around here. We already know this stuff, right? And we got proof of that because what happened right here? This is the fair value gap on the 4-hour. When it traded back into it, the sell-off that happened at the middle of it, right? Then we sold here. We came back in it again. Where is this wick? It's at the middle, right? That wick came, the middle of this fair value gap is 6990.75. The high on this wick is 6990.75, right? That's literally spot on, right? If I add the upper quadrant, the quarter on this fair value gap, if I add that in here, right? Look at where this other wick is, right? So if we add this quarter point from these 2 quarter points, which is 25, and I'm gonna make this a different color. Let's go black. The 2 quarter points, I'll make black, right? Okay. See how accurate this is? This is the first one. This is the first one the last one I just mentioned. And this is at the middle of the fair value gap, the 4-hour. The quarter point in the upper quadrant is 7,001.75. Look at the high of this candle. Look at that, right? The high of that candle is 7,002.50. That means that 2 ticks off from being exactly this same price, right? So when I'm telling you where and showing you where these levels are, this is the reason why, right? Because the way that this stuff trades is almost spot on sometimes, right? You get reactions at any one of these levels, right? Where you could see price reject from and respond from, right? So that's why you have to consider, right? Hey, price could go into here, sell off from here, and then go, right? So that explains why you see these projections the way they are, right? Then again, okay, I know that this high should likely get taken out, right? So I am expecting us to start to move up. All right. So I'm gonna mark this high off. I'm gonna mark this low off. And then overnight, while I'm not trading, I'm not worried about nothing that happens in between this area. I want to know which one of these highs, which one of these lows get taken out. So after I go to sleep, I wake up, I got my projections right now. I done read the news. I know that today I got ADP farm roll. If it come out at 8:30, 8:15, as negative, I have reason to believe that we will sell off, right? So now the next thing is, let's skip to the morning time, right? This is the pre-market, right? I'm up around 7. So let's go to 7, right? All right. So 7 a.m., right? And we already took the high out. We held above the daily opening price. Let me move this out the way a little bit. We are above the daily opening price, which is here. When the market opened, we opened at 6935.75. 2 pieces of information I already got. We took the high of London. This the London high. When we open up on the 7 o'clock candle, I'm looking at 2 other things in the morning, right? I want to know, what did NASDAQ and Dow do, right? NASDAQ also took out the same high at 7 o'clock in the morning, right? No. NASDAQ made the same high in London above this little wick right here. It made the high in London. But you notice at 7 o'clock, the high that S&P took out didn't get taken out. So we got divergence, right? Meaning that we got these 2 pairs doing opposite things, right? So S&P made a higher high. S&P made a higher high. NASDAQ made a lower high right here. So this is the high it made for the day. That's the high, the lower high right here. And if you look at these side by side, which you'll see on this chart, right? You look at these side by side, right? This is those 2 highs. This is the high right here, the London high, and the pre-market high right here. Then you look at NAS. This is the London high right here. This is the pre-market lower high. So one is going up, one is going down. And then NAS is the heavier already. We already seeing that NAS is already heavier. We took out this low. We took out that low too. But what you're not seeing is any strong pullbacks like you see S&P. So this telling you already, NAS is heavy. NAS is tech stock. NAS is already moving. So this giving you information still, right? So now what I'm telling myself is we got divergence. This one is doing this. That one is doing that. This one is heavier. This one is stalling, but it should follow this move as well, right? Okay. So the next thing I'm looking at, right? This is on the replay still, right? Should have paused it, but this is going in the pre-market, right? This is going into the 9:30 open, right? We're going to look at this from the 5-minute chart, right? So we're going to go over here. What I'm doing once I got all of that information, right? I got the understanding of kind of where things are going. This is the last piece de la raison, right? The resistance, right? This is the VIX chart. This is VIX. VIX should be doing the opposite of whatever the indices are doing, right? Should be doing the opposite. And the VIX opens up at 3:15 a.m. And at 3:15 a.m., you start getting the volume, the total volume of trades on both sides moving the market, right? So the VIX measures the volume. So this is what I'm looking at, right? So during the pre-market and the London hour, right? VIX gap to the downside. You just want to go back and confirm that they are doing the opposite, right? They are doing the opposite, right? So every time I'm pulling my candle higher. Let's see. This is after hours, right? So if you see my cursor here at 18.27, I should see myself at a low on NASDAQ and on S&P, right? So if I scroll over, right, and you can see my cursor, this high was made at 440. This low was made at 435. So this is a high, there's a low, right? This is a high, there's a low. That hang on it's we're looking at Dow on NASDAQ. Where my cursor? Oh, this is the low right here. 440 low, right? You should be seeing this all throughout your trading hours, right? It should always be in the opposite direction. Then you take that same exercise that I showed you before on ES, right? This was the last swing low. We took it out here. This is right now, this is the lower day. We didn't take out the high. The low for the VIX is all the way down here from yesterday. This is the high from VIX yesterday, right? We got a high right here from the London session. We got a low from pre-market session, right? And we sitting inside of a gap right here. There's a little fair value gap right here before the market open over here. So I'm already saying to myself, okay, if I was to sell, right? If I was to sell on VIX, right, it should happen around here, right? So, but I'm thinking that we're going to be bearish on the indices. So that means the VIX should push up, right? So if I see price come up to this area, that means that if I'm going to sell on S&P and NASDAQ, that this should push through that area and use that as support. And we should take out this 1827 high. And then we should look at any other high above that as being a target. So we made a new high at 1918. Then we took out this little short-term high. Then we took out this high. And this is the kind of stuff that will like help you map out what's supposed to happen and how you can get a upper hand on what's going on with the market. So at 9:30, you need to wait for the VIX to reopen again, because the VIX will close and pause for the first 5-minute candle. You wait for that first 5-minute candle to give you whatever it's going to give. If it's going to gap, if it's going to just flush in one direction, you wait for that first 5-minute candle to give you the information that you need, right? That's going to help you confirm the timing of your entry for any setup that you got. If it just does something that you're not expecting, you wait for that 10 o'clock candle, or you wait for the first presented fair value gap on either your setups. I think, Cars, you got your hand up.
Yeah, so you saying we use that strategy. We using the 1 hour time frame, and we're gonna hold and pause and wait for the counter to open up within the first 5 minutes. Is that what you're saying?
No,
Or the market
5-minute. You using the 5-minute. You using the 1 hour to just find your last highs. Use the 1 hour to get your last swing high, last swing low to find out. And your swing high needs to be a 3-candle combination where you have the low here. There needs to be a higher low here and then an even higher low over here. So it needs to look like this right here. That's a swing high where you got a high, a higher high, and a higher low, a lower high right here on these three candles, right?
Right.
Or over here, you got a high on this candle, you got a higher high on this candle, you got a lower high on these candles. That's a swing high. This is what a swing low would look like, right?
Yeah.
You need to find those on your chart, right? And then within those ranges, you need to look for your fair value gaps, your PD array, whatever you're going to use, fair value gaps, order blocks, volume imbalance, whatever it is you're going to use to set up your trade. In my particular case this morning was at this particular high, there was this fair value gap that should have been buying, and it didn't. We sold through it right here, right? So that means that this area is likely to be returned to if we were to sell lower. Then we got a little fair value gap right here. Again, another area we could be selling from, right? So this is what I use to set up my trade, right? Once you got all the information, this is where you go ahead and get your setup based off of, right? So my setup was to go short. And I used this fair value gap that was right here as my entry. And then I used the last high of the day. It ended up being the high of day right here at 69.65. And my target at the time was going to be, the overall target was the yearly, right? To tap down into the yearly open. But then I had short-term targets of whatever these lows were right here. And then if we got any lower, trade down into this fair value gap on the lower time frame as a target, right? And I'm getting my targets again. Last swing low is here. If I'm getting in right here, this is at least 100 points, right? Or 10 points right here, or 100 pips right here. Just taking this first target out, right? And it's actually more than 10 points. I think it was like, if I got the low, it ended up being lower day ended up being yeah, it was ended up being 3150. That was the one I used. 3150, right? So this is the lower day. So this is right around 20 points on the move, right? And then you got about 16 points on the stop loss, right? And as long as we don't trade above this, you in the trade, you take profit at any of these lows as your target, and you partial at any one of those lows, right? But if it don't take out your stop loss, you in the trade. And even when it got up into this inverted fair value gap, you could add on up here because that's a good add-on spot, or right around halfway, and then you take the trade even lower to go all the way down. Same situation with NASDAQ, right? You don't have a lot. You don't have the fair value gap that's right here, right? There's a fair value gap that got inverted right here. This is now, it was supposed to be bullish, right? Oh, dang. It was supposed to be bullish right here. This took out a high, and you were supposed to be making new highs, another high, after price came into this. So once you see price coming into this 65, this 69.50 should have made this move right here should have been making a new high. Once we didn't do that, then you're looking for a fair value gap to the downside. It ended up being away from the gap, but you really want to see it inside of here. You probably could have got it on like the 1 minute or so, but we not going to harp on that, right? Entry was actually right here.
Or let me ask you this. Now, I heard you mention something about the section opening back up at 9 o'clock or something like that
That's on the VIX.
on VIX.
The VIX closes. The VIX closes at it doesn't close, but there's usually a gap on the open. I won't say that it doesn't actually close, but the 9:30 and the 9:25, those two candles, they time out, and then at the 9:30 it opens up from there.
So around 9:25, that's when you have a pause, and then 9:30 it starts moving.
It opens up at 9:30.
Okay.
So that's why you see this session rate right here.
And that's what you meant by the wait for the first 5 minutes. Is that what you were saying?
Yep.
On the 9:30 count.
Yep.
Okay.
That's what
I'm trying to get clarity on.
Yep. On the 5-minute chart. On the 5-minute
chart. Okay.
Yep. That's when what you want to do. And you just waiting to see how that candle responds, right? On the VIX. Right? So the same situation, this candle right here, this should have been a fair value gap, right? That goes to the upside. This is at 645, right? If we look over at NAS over here, right, we don't have that same candle at 645. But what we do have is over here, we got a fair value gap that we already done sold off from over here. We already reacted to something over here on NAS that lines up with us reacting to something on S&P, right? So this is a fair value gap to the downside right here. We already see that reacting, right? Then the same candle that we got our fair value gap on S&P is the 845 candle. What do we have right here? Now we in line over here. S&P and NASDAQ both got an 845 fair value gap to the downside, right? So now going into the market, right? Now going into 9:30 open, I got a whole thesis right now, right? I know that when the VIX opens up, I have a fair value gap on both of these pairs that it should respond to, right? I was also looking at this order block right here. And the reason why I was looking at this order block is, again, to stay in sync with NAS, right? I mean, S&P. So if I got this fair value gap to the downside on both pairs right here, let me make this a little bigger so you can see it. I got a fair value gap right here. I got a fair value gap right here. I got an inverted fair value gap right here. And I got a fair value gap right here that's bearish. At the moment, this bullish area is now bearish. And I got this order block right below it. So I knew going into the market, even if I am going to be bearish on this, I know that VIX could drop. This should push the market up into one of these areas. It should be either holding here, it should come right here, or it should come right here. And just like with S&P, we don't have that second piece, but we do have the fair value gap right here, and we got the inverted fair value gap. So on the open at 9:30, it should push NAS and S&P up to one of these levels, one of these ranges, and then it should respond from there, right? So we open up. The market pushes up, right? On the 9:30 candle the 9:30 candle on VIX. Let me make that bigger too so you can see it. So just like we got something on ES and NAS, we got something on VIX, right? This should be selling us, right? But on the 9:30 open, right, we push up, right? Remember, we pushing up. And we know that it should try to sell from here. It should try to sell because this is a bearish area. And because we know that it's going to try to sell, we know that we should get a fake out right here. Just like we should get a fake out up here. So that's where this buying is coming in. This buying and then this buying over here. That's our fake out. We just don't know if it's going to stall out inside of here or is it going to come in here. In our case on NAS, it stalled out exactly where it was supposed to. In our case with S&P, it overlapped this, right? It pushed through this fair value gap and it came into the inverted fair value gap. But at the end of the day, we still in our range, right? That's where the price sold off from. Then as soon as we faked out over here, we made a lower low. We made a swing low. We have a low here, we got a lower low, and we got a higher low, a swing low. And then once we make that, we take out this high right here that we just made, and then we make a new high. Then we come back down to this level, which is, it was bearish, now it's bullish. And then we make a higher low. There's a low, there's a lower low, there's a higher low. And then we just take off, right? This gives you that extra confirmation to get your timing right so that when you take the trades, you got an additional confirmation. So the walkthrough in a summary, right? The night before, find your highs and lows. Use the 1 hour chart is the best. Then you need to ask yourself the simple question is, where is probability going to lead? Is it going to make me take out a low or is it going to make me take out the high? Then find where are my levels, my points of interest. Where's my order blocks? Where's my next order block? Where's my next fair value gap? Where's my next swing high? Where's my next swing low? Right? That's what you're doing the night before. Then in the morning, you are checking that news. You checking CNBC, you checking Bloomberg, you reading that main article to get a sense of what's going on and get a sense of the bias that we doing, right? You're looking for key terms, right? You're looking for any kind of terms you can use that gives you an idea of what is actually going on, right? That looks like what we just went over, right? That looks like the headline. You starting with the headline. What does that headline give you? What information you getting out of this headline, right? Then you digging down into the actual context of the paragraphs, right? You looking for key terms, right? That's going to give you sentiment, right? You looking for weighing investors weighing results, right? You looking for major sell-offs. You looking for second straight day of losses. You're looking for things like the companies that are causing this, right? In this case, we are looking at the stocks that we're considering, right? So Alphabet was an issue today. NVIDIA, Broadcom, all related to tech stocks, right? Then on the next day, you're confirming what are the levels, right? You're confirming, right? How did my overnight view compare to what's going on in the hours of my trading hours, right? So I already had this high, I had this low, right? Which one got taken out? It ended up being the high, right? And we got a high for the day is our London high, right? We got a low for the day. The low for the day is an equal low. And these lows are the lows that's carrying the day. So I got a tight range going into the market open, right? Now I got my structure. I have my sentiment. I have my key lows and key highs. And I have my bias based off of all the information we gathered, right? And then next, you confirming what the news is, right? I like to wait until the news comes out. I don't usually I don't get into trades before news come out, especially if we got a red folder. If we got a red folder, I don't like to trade before that release. And if I miss it, I miss it. I don't care. But I don't want to give myself put myself in a trade and I just get wicked out for no reason, because a lot of times the news will take both sides of the market. So I would rather just give myself that opportunity to just let it breathe, right? So in this particular case, when I gave it the room it need to breathe, it ended up being negative, right? So now all of the things are lining up that I need in order to take my trade. Then in the morning, I'm saying to myself, what highs and lows got taken out, right? What highs and lows got taken out. So this is, in this case, we had divergence. We had the London high get taken out on S&P on this candle. Same candle, the London high did not take it out on NASDAQ, right? So I see already I got divergence, right? I have correlation with there being a fair value gap right here that got inverted, and I have a bearish fair value gap that price is responding to on NAS. They're both responding to some point of interest before the market open. Then my final piece is check the VIX. Check the VIX. This is how you get your confirmation. This is how you get your timing, and this is where you get that extra last one piece. That this will tell you, the VIX will tell you three things, right? The VIX will tell you it'll tell you, give you insight on the direction. 2, it'll give you the timing. And then 3, it will tell you how long you can stay in your trade. Because as long as the VIX is going opposite of what your pair is doing, you can stay in the trade. If you see VIX still taking out highs and you're in a sell on NASDAQ or S&P, and you see VIX taking out highs, that means that S&P and NASDAQ should still be taking out lows, right? If you're in a buy on S&P or NASDAQ, you should be seeing VIX take out lows. And as long as VIX is taking out lows, you know that you can stay in your buys and you should take out whatever the next high is on S&P or NASDAQ. And then you go through this exercise with the VIX, right? We know VIX has 2 session hours. It's the 3:15 and the 9:30, right? Once you see the open, we in this particular case, we gap down, but we clean the gap up, right? Then you're confirming that that whatever asset you're trading and you're looking for the inverse correlation, you're confirming that they're in sync, because sometimes they will decouple, right? So if I'm on VIX, I need to see a high. In this particular case, the high is at 4:40 a.m. So my 4:40 a.m. high is at 1827. So that means on NAS and on ES, around this 4:40 time frame, if I move my cursor over this, I should see a low. So I see my low. In this case, the 4:40 time frame gives me this low at 69.32. I should see the same thing on NAS. The 4:40 candle gives me a low at 25,353, 55.00. I need to go to the next low, right? This low right here on the VIX should give me some type of high, right? 17. This is at 5:30. This low at 1774 should give me a little short-term high at 5:30. That's this candle right here, 69.54. There is also a short-term high on NAS at 466.75, right? This should give me a low, even if it's not a clean low, right? Because this ain't really a higher high or nothing like that, right? But let's look at this one. This is the 650 and the 7 o'clock candle, right? This should give me a high because I'm at a low right here, 1747. And this is the same time frame. This is 69.65. On NASDAQ over here, that's that 25,491 high, right? All right. Now we establish we're in sync, right? So once we establish we're in sync, right, we need to find our again, confirm on VIX. We got this area that's supposed to be bearish. We got a fair value gap that's supposed to be bearish, right? You let that first 5-minute candle open up. And once you see the first 5-minute candle on VIX open, based off of what your setup is, it should be doing the opposite of that. If it's not doing the opposite, then that means that it likely may have gapped, right? If it gapped and you're looking for price to do a certain thing, wait for the gap. Wait for the gap. Wait for the gap. It's either going to sell off from the gap or buy from the gap, or it's going to invert the gap. Or it's not coming into the gap at all, because that means that momentum is so strong in a single direction, it's not going to come back to the gap, right? And in our case, again, we have a point of interest. We have this fair value gap. It traded through the fair value gap and inverted it, used it. This was supposed to sell right here. And instead of selling, we pushed up through it, traded down through it. We breached it a little bit, but then we traded back up through it and held it. And the same time we making this low, the low we made right here, what are we doing on both of these pairs, right? 17.76. The low is at 945. What's happening at 945 over here? 945, we're making a high at 6960.50. Over here, we're making a high inside of the range that we knew we were going to sell off from. Over here, that we knew we had a high probability that we sell off from, right? So this became our high over here. 945 over here, we selling off as well. And then we make a short-term low right here. We make a short-term high right here. Then we push back up. 1981, 1918, right? What are we doing at this high? We're making a low down here and rejecting it, just like we did over here. If you hadn't got into this trade on NAS, probably wouldn't have got into it, but you had a second opportunity on ES, because this high right here that we had lines up with this low over here. You could get in over here. This candle is at 1025. You see at 1025, we got a high. Let me zoom in right here a little bit. 1025 right here on this wick. At the 1020 candle, we got a high. We got a higher high, got a higher low, a lower high. That lines up with this candle right here, that 1025 candle. So now, at the same time you seeing rejection to the upside, you seeing rejection to the downside. And if you just missed all of this good money, you still had another chance at the same areas we looked at to take this same sell. Does that make sense?
Yeah,
All of
definitely.
that makes sense?
Yeah. All.
And I'm gonna call somebody out because I appreciate him for jumping on my call. My buddy Jared, man, I appreciate you for getting on, bro. And I wanted to point this out to you because you mentioned about losing out on trade on NASDAQ. And this was what I wanted to show to kind of give some more insight on something to consider when you're making those trades on NASDAQ, because VIX, they are inverse correlation. Whatever the opposite, whatever VIX is doing, S&P and NAS should be doing the exact opposite. And you can use this to help you time your entries. You can use this to help confirm your bias, and you can help use this to tell you if you're in the trade longer, or if you can stay in the trade longer or not.
Got it, man. I appreciate that.
I don't know if it's something y'all have seen before. I know we done talked about it on here a lot of times, and just reiterating it. And I kind of wanted to give y'all just this is my thought process as I go through my trading day. And in the morning, the night before, during, after, and then, even more so, like, again, shout out to Anna for just putting me back on my in my Airtable, right? My Airtable with all my data, right? So if we looking at this, right? So this is my stuff from yesterday, right? I already got the insight about what I wanted to do going into the market. So all I'm doing is saying, hey, all right, this is what I'm confirmed. This is what I'm supposed to be looking at the night before. It's on my charts too, but this give me my idea just to reiterate, like, hey, it's on there. I know that I'm supposed to be looking at this. I know this how I'm supposed to be looking at it, right? That give me my confirmation of what I'm supposed to be looking at, right? So that when I go into the day and I'm looking at my trades, and now I can just say, all right, cool. I did everything I said I was supposed to do in looking at what I was supposed to be looking at, right? All of the things that I looked at, the setup that I took. The setup was an inverted fair value gap setup. It broke structure. We had a change of character. We had a bearish fair value gap. We had ADP news. The news was negative. We left a daily high. We took out the Sydney and Asian low. We made a new daily low, and then we used inverse VIX correlation. That's everything that happened, and that's how I'm looking at it. Everything, that's how I'm looking at all of the things that I did, right? So, yeah. So now that was what I wanted to go over with y'all, right? So now I'm gonna just go quick through what I'm looking at for the rest of the week, right? Was that good or was that okay? Was that good, y'all?
Yeah.
That was amazing.
Yeah, that was pretty good.
Did that give y'all like a good insight, right?
Yeah.
Oh yeah,
Need
very
to
excellent insight.
post that ASAP.
Cool. I missed posting the video Sunday. Man, my computer just been acting up, y'all. So I'm gonna have to. I don't know what I'm gonna do about this Sunday video, but I will make sure I post this video. Okay.
Mhm.
All right. So, since I'm on ES, I'll start with ES. Right. This was what I was looking for yesterday. We took the downside. We took the downside.
Yeah, it don't matter how you cook that stuff, man.
Was that?
To my cooking on this day trade.
Oh, yeah. Hold on. Okay, so we established what happened. We took the downside. We hit all the downside targets for this, really for the day, right? That's what I was looking at. Hang on. Okay. All right. So going into tomorrow, right? You can see we took out the previous day low. We took out, this was the weekly low. We took out the monthly low, and we took out a previous month low, right? We can see that on the monthly chart right quick. Right, we took out all of that, right? This is the monthly candle. We took out this low right here. We took out this low right here. So on the monthly, we kind of pushing down, right? And we took out 2 months worth of lows, right?
Your
On the
chart is not
weekly,
there.
y'all
Chart
can't
is
see it.
no black screen.
All right, let me reshare. Man, this is super annoying. All right. All right, cool. How about now?
Good.
Okay.
Mm-hmm.
All right. So, so we on the monthly. So on the monthly, again, we took out 2 months worth of lows right here. On the weekly, we took out last week low or the week before low, and we took out this low. We might stall right here, right? We do have this month low right here that's in range, and then maybe we want to go down here, but we can't say it, right? But we did take out monthly lows. So if I'm looking at the daily, again, we took out yesterday low, took out this low, we took out this low, we took out this low, we took out this low, right? And the thing we want to consider, most immediate point of interest, is this gap right here. So on the downside, if we still going to go down, this gap right here is probably where we need to come to if we still going to sell off some more. This gap is actually bullish though. So we know if we continue to fall, the
One
things we
thing,
need to
like
look at.
I think
What's
you
up?
started with MES, right?
Yeah.
This is MNQ.
Okay. Well, this is the one I meant. I meant to say NQ then. So
Okay. Okay.
yeah. So my bad. This is NQ, right?
Mhm.
All right. So we already know if we're gonna continue to fall, right? We got the low from yesterday, and then below the low from yesterday is this gap. So if we sell off, we already know that's where we're going, right? And then worst case scenario, we trade through this low and we trade through this gap, and then we come after this low. Then we can look over here, see if anything over here we need to be looking at. This order block, this whole thing of order block, but maybe we come deeper into here. I'm not gonna worry about that yet because I think we got a lot to deal with before we come over there, right? Okay. So we got a bias on the daily, right? The other thing is because we sold off so hard yesterday and the day before, we may stay inside of this body, right? We may stay inside of the body, right? But then on the upside, we got something again. There's a gap right here, and the gap just so happened to be lined up with the yearly opening price, right? And this is important because this particular price level tells market makers and larger institutions whether or not we are going to be positive or negative on a year, or positive or negative on a week, or positive or negative from the month. And you get a lot of good trades from these areas. So we could see something happen around this area right here. If we do come up, there's your gap right there. But this time it's to the downside. That's your key area. So if we come into this area tomorrow or sometime this week, I don't know which way it's going to go, but I know a decision will be made right there. It doesn't have to be bullish or bearish. We just need to know, all right, this is an important level. Something will happen here. Either we reject from here to keep going down, or we push through this to go up. There will be a large move to happen off of that, right? Now we going down to 4 hour, right? Boy. Can barely do this call, man. This is crazy. Okay. All right. We took this low out. We don't need him no more. We took this low out. We don't really need him anymore. We took this out, this gap, the weekly opening gap. We don't need that anymore because we traded through it. This bullish fair value gap, we can leave it, but it's been replaced by something bearish already. So we really don't need it anymore because we already got it replaced. This inverted fair value gap, that got replaced, right? So we took out this high. We don't need that high no more. That got taken out. This low got taken out. We don't need any of that anymore. Because now we got a new low over here. This the low we need to be concerned with. This is right now, this is the low of the week. So that's the one we need, right? Then we got yesterday's high right here. That's the other low we need to be concerned with, yesterday's high. Right, so we already got our little range off of this, and we can break that down one more time, because if we go to the 1 hour, you'll see we got a little short-term high that hasn't been taken out right here. And now we got our area and our range to consider overnight, like we said, right? However this responds to this high, right? This the most, we close near this high. So this is the high that's going to be important for us tomorrow. Right? Is this high? This is a little liquidity right here. And then we got, this is the lower day for right now. I could put that on there too. It's not a, yeah, it's a swing high, a swing low. I'm sorry. This is the low of the day right now. Boy. This is the lower day. Okay. So now we already know, all right, on the 4 hour, I saw something else that we need, right? This little area right here is a little small fair value gap right here. So let me grab this and I'm going to pull this down over here because this is going to be what we use here. So we already seeing, right? If this sells off, right, you know already, right, that it's going to come and try to take out this low. That's the first thing, right? But if it try to take out this low, we know this is the area we should get a rejection from, right? So our 0 to 1 move to the downside, if it does push all the way down, it's going to target this low. Now, we may not take out the low if it's going to push us back to the upside. There's a little area right here on the lower time frame that might keep us from taking out this low, but let's assume that this 0 to 1 take us to the downside, right? There's going to be a fair value gap inside of here, so that's where we should get our 1 to 2 retracement, right? If we get the 1 to 2 retracement and this does want to continue to the downside, we already know the first place it's going to want to go is to take out this low, and then it's going to go deeper into this range, right? So we should at least be challenging this area again, right? Same thing over here. If this continues to go lower, there should be a gap in between here, a fair value gap. When we get that, that should give us our 3-4 retracement, right? That's going to probably hold us below this. And then there's that other low that we mentioned. I think it was around 24,400, but 24,400 is a nice whole number that we could see price trade down to. So let's just use that as our downside target, right? And then the same way we're looking at these retracements at 1 to 2 and the 3 to 4, that's also an area we can bounce from if we decide that we want to push up. I don't usually draw these. I just usually just bring that to your attention. But let's say worst case scenario, we get a bounce from the 3-4 move, and that has the potential to at least give us a higher retracement. And that also has the potential to reverse the move from here, just like we have the same potential at 1. So this same move right here could also happen here because we're responding to a higher time frame point of interest. Now, the upside area, right? It looks similar, right? Because this is where we closed, right? And you can see already, right? Why would we get a high here, right? Because we got a gap on the daily. This is also an order block, right? So we could be pushing up just to push inside of this order block and this gap right here. We're going to get a response from that area, right? And if we get a response from that area and we get a retracement, that should be our 1-2 move, right? Our 1-2 move should take us down to at least maybe challenge this high, or this candle right here. This is actually a lower time frame order block. And you can tell by the fact that there's an engulfing candle and then there's this big wick. If we go to the 30-minute or the 15-minute, you'll see an order block right there. You can see it right there. So if we get this rejection, this got inverted, this is going to probably be where we get our 1 to 2 move. Hold up right there, right? And if we hold at the 1 to 2, the high that we made right here is going to get taken out. And then this high should be the next target, right? So that's where we should get a 3 after we take out this high. Then we need to see, hey, where could 3 be going to, right? 3 could be going into this fair value gap. It's a lower time frame. It's a 1 hour, but you can also see it on the 4 hour too, right? And then there's a little small order block right here. So that sits in between these two engulfing candles, which in most cases, when I see something like this is just one big fair value gap for me. So remember I said we replace this bullish area with this bearish area. So I'm just going to use this as my fair value gap over here. 4 hour. Right? And you can also see if we break this down into 4 quadrants, right? Like we can do, the bearish look like this. We add our quadrants in because this is a big fair value gap area, we can add the quadrants in, the 75, and let's make this black just so it stand out. $25, right? Now we got our 4 quadrants, right? So in this case, you see where this lines up with the lower third quadrant. That's why we looking for highs around, because right above this high, you got this lower third, right? That lines up right at 25,596, right? So then if we do get the high here, we know that all of this area becomes inverted, and then it should try to use this to the upside if it's going to keep going up, right? So now we know, hey, if we get this 3, if we get this 3 high and we get this 3-4 retracement, it should hold up, because not only do we got this gap, but we got the yearly open, we got the weekly open, the monthly open, and a previous day high. So now if we come down to this area and we hold, we know this, the 3 should get taken out by the 4-5 move, right? And that means we come deeper into this fair value gap. We either come to the middle or the upper third right here, right? So that's why we get that set up. And just like we said before, because we in somewhere bearish, we can get a rejection at the 1 or the 3, right? So we know that this rejection could happen at one of those levels to continue us to the downside. So I'm going to actually just give you guys this chart because my computer is just not working with me today. And I will give out the rest of the setups and I'll add them to the Facebook group. So that way I don't have to like go through them all with this choppiness that I'm experiencing right now. And I'll add them into the Facebook group under the futures post, right? That I usually add. So this is here in the Facebook group. Dang, I was gonna give a couple people some shout outs, but they already gone. I'm gonna put them up under the futures plays. So if you looking for it after the call, I will add everything in there, all the setups. But I will give you this setup in Q. I just don't want to keep going on this because this computer is running slow. I think I clicked the button like 2 minutes and I'm getting the response after the fact. So that's why I'm doing it like this. I would actually, here's some homework, right? Here's some homework. Take this chart and give me your interpretation of this chart onto S&P and Dow Jones, because it should look similar to this. But if you can do this, take this chart and use this chart to follow this markup and these projections and do it on S&P. I'm not going to post nothing. I'm going to actually give y'all, matter of fact, let me set it up now. Let me set it up now. I want to see how close you guys can come to this. How close you guys can get to it. And just to see if you got a good understanding of what I'm saying. This will give me some insight. So on this post that you should see in the group, I want you to post in the comments your markup on S&P, Dow, VIX, in dollar. I'm gonna post mine on here too, but I want to see how similar you guys get to seeing what I'm seeing and why we should get there, right? And then I'm gonna pin this to the top. So it'll be at the top of the group when you go in there. And I'm gonna add my charts. And then just a couple things. These are my favorite tools right here, right? These are the tools I use. I use field retracement, long position, short position, trend lines, the horizontal line, horizontal ray, rectangle, text box, call out, an arrow, the brush, the path, the Elliott waves, pin, and price notes. You don't have to use them, but I'm just giving you these just in case you're wondering, like, how do I get this direction? That's an Elliott wave, right? The arrow comes from this right here, right? My trend line, which is this, that's where I'm using to mark up my lows, right? My fib retracement, I've created my own fibs and customized those so that I can come up with these different ones, right? So for me, like, there are different things that I need to get or interpret. So I got a whole list of different fib retracements that I use, right? But I already got them pre-configured. So that way, whenever I want to create a fib to determine like a price gap, I'm using this one, right? And in this one, the default settings are not the same as the other ones, right? This one, I'm only using the 0, the 0.5, and the 1, right? And then I've gone in and added this text over here, right? And I added the text already, right? And then I just save these as templates. So that's how you get into all of this. That's how I'm getting all these different ones. And these are all my different templates that I've saved and created and stuff like that, right? If you see a 15M plus FVG, that means 15-minute fair value gap. Or 15M minus FVG, that means 15-minute bearish fair value gap, right? Same thing for the 4 hours. This is a monthly fair value gap, bearish, bullish. NDOG, new day opening gap. This is the gap that happens when the day opens and you get the gap. This is NWOG, new week opening gap, right? Equal PG, that means that it's neutral, right? No, there's a gap, but it's neutral because they've been traded through it or something like that. Same thing with this. This is an inverted fair value gap. That means that it was bullish or bearish. Now it's the opposite of it, right? And then that kind of like really, you can kind of interpret the rest the same way, right? So that's why you're seeing that, right? You don't have to do it like that. You don't have to go through the same thing, but that's just how I do, right? Just like for my trend lines, right? If you look at my trend lines, I got templates for those as well, right? So this template for a breaker structure, it looks a certain way, right? This one's for order block, a bullish order block. Anything got a plus in front of it means it's bullish, right? Anything got a minus in front of it, that means it's bearish. Anything with an equal sign means that it's neutral, right? That's just how I operate, right? You don't have to do things like that, but it's just how I operate, right? And then each one of these, like this, the previous day low, previous day high, right? Monthly high, monthly low, right? Then when I actually in my setups, right? And I need to make sure I'm seeing my targets, I got these ready for, right? So all I got to do is just pull the line out, draw it, and I got it on here, right? monthly low, yearly low, right? Yearly high, yearly open, right? So if there's equal highs or equal lows, I got those already, right? If it's an all-time high, all-time low, Sydney Asia range high, Sydney Asia range low, I already got that, right? A change of character and it's bearish, right? That means that we've taken out one of these lows and we going even further down, right? So that's just how I have my charts, right? And like I said, I just want to see what y'all come up with, right? Without my screenshotting the acronyms, yeah, sure. This is what I have for the trend line. Most of them, anyway. Make sure you grab that because, you know, in the chat, it ain't going to stay. And then this, the rest of them. That's a good question. It's a real good question. I actually started to like write all of this stuff out, but I haven't done it all of it yet. Because these aren't my terms. They're ICT terms. So I ain't want to like nobody thinking that I made up all this stuff when it's from him. That's the fibs right here. Okay. So, all right. So homework, what is it? Y'all remember?
Yeah, markup, Dow, or I think it was with not NQ, but
S&P,
S&P
VIX, and
to
dollar
see
and gold.
and go.
I want to see how close y'all can get to take this and use this and then mark up y'all charts. Then use this to use to mark up the rest of them. I can tell you right now, NASDAQ and Dow will almost look the same as this. I mean not NASDAQ, but S&P and Dow should almost look the same as this. There should be a little variation, but it should almost look the same. Okay. So I know one person who I know gonna probably look exactly like mine, and she know who she is. That's my mini me. That's Anna. So Anna is my mini me. So I'm about to, if y'all got some questions too, ping her as well. Cause she know her stuff. She just be real quiet, trying to act like she don't know what she know. So also give Jason a shout out. And if I think I already told y'all, Wale, Jason just finished his $100,000 account. So
Congratulations.
he was on here. I don't know if he on here right now still, but he was on here. Ping him in the group, post it in the group. If he send me, I'm gonna see if he'll send me his certificate. And if he send it to me, I will do a post in the group. The certificate looks like this. When you finish, you're gonna get this nice little certificate saying, hey,
I love this.
I don't know how I got this date on here. They ain't got the right date, but
Maybe this one is your old one?
no, it's
That be when you
just
started the
got this
account,
one.
maybe?
They just got the wrong date on it. But
Did you start that account on that date?
I get maybe that's what it is when I bought the account. Yeah, because I bought the account probably on that date. Yeah,
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 we did that in April. Yeah.
yeah. Because I got it, but I didn't actually start trading it until
Mhm.
July. So, so this is the other one. There's this one, and then this is the one I've been had right here. This one was the 150K, right?
Mhm.
So this one is done, right? So
So
you
you
see
got
that?
three, right?
What was that?
You got three.
Yep.
Hello.
And
Yeah.
I'm about to have seven in a few days.
Mm-hmm.
If
Okay, so let me ask you something about these certificates right here.
Mhm.
When you opening accounts and you finishing the challenges and things like that, do like brokerage firms look and see about your certifications, and then I mean what significance do they hold? I mean, I know it's a personal achievement, no problem with that, and I know that the company appreciates what you're doing. So, but what?
It has nothing to do with a brokerage firm.
Oh, okay, all right,
They don't you're not a professional trader technically. Like a professional trader, you need to have your certs, your FINRA certifications and stuff like that. And you're likely trading for a brokerage. And this is a proprietary fund, a prop fund. That means that you're trading other people money, basically. Um, and you're going through this company to do that. So basically, the program that they offer is a means to get capital outside of the normal uh terms of getting funding, right? They make sure that, hey, with this $300,000 account, I'm going to set a profit target. If you can make this profit target without breaking the rules that we have set for you, then we're going to give you access to the funds, right? And when we give you access to the funds, we're going to give you 90% of the profits you make. We're going to take 10% of the profits. And then after you've proven you're a good trader, then in some cases, we're going to move you into a live funding account where we're going to actually give you live money. But for this particular company, you don't actually do that. You just stay in the PA account and get paid through the PA account. The other company, Top Step, they take you into a live account. So whatever you have in your technically PA account, they move that money into a live account and you trade it from there. So that's the only difference.
okay. So, could you explain the proprietary account and the live account?
The live account is an actual live money. You trading with live funds. The PA account, it is a proprietary funded account. It's not actually live, but they're making and the way you're making money is they're copying your trades. And as they copy your trades, you're making money for them. So they take whatever your trades are and put it into their own live accounts and they make money off of that. So they make money three ways in prop firms, right? They make money off of our subscription fees that we pay every month to get access to the account. Then they get paid once you're funded and you're actually making money. They take their 10% off of what you make. Then the other way they make money is once they trust you're a good trader, you're not breaking none of the rules, you're not doing nothing crazy or sporadic. They copy your trades in their live accounts and they make money there as well.
Okay, all right.
So, you know, it's like a win-win situation for them because once they recognize you're a good trader, they're making money off of you three different ways.
Okay, so They're taking 10% off the account. They're also copying your trades and trading with those as well.
Yep.
And what would be the third way they're making the money off you again?
The annual subscription.
The annual subscription. Yeah, okay.
The like whatever they charge you for keeping the account, or like some companies they do a one-time fee, other companies they do a recurring fee, and in this case this particular company does a recurring fee.
Okay. Okay, yeah. And that money will add up exponentially if they got so many people trading off so many different accounts.
Yeah,
So their accounts, they got plenty of accounts for people to trade off of.
several thousands.
Okay, cool. And they're making a monthly, yearly, annual subscription fee off of that.
Yeah.
See how the money add up. So they ain't
And
really missing nothing. They always making money. It's always cash flow going through.
yeah, yeah.
Okay, cool.
And and they and you as you can have multiple accounts. With that particular company, you can have up to 20 accounts. The other company I use, you can have up to 5 accounts. And then there's other companies as well, but these are the two that I use, Top Step and Apex. So because there's another good company that people are using, and it's called My Funded Futures. I haven't looked into it yet, but that's another one. And then there's FTMO. FTMO is one that we used to use. That's back over here in the United States, and that one's another one that offers the same thing as well.
Okay, cool. Sound good, man. Sound good.
Yeah.
I'm gonna jump off, y'all. Session. Catch y'all on the next session.
Okay.
Get that homework updated at least
Okay.
tomorrow.
Post it on here.
Uh-huh.
Again, when y'all get it, just post it here. That way I can find it.
Okay.
Um,
You want to post it on the group page, right?
yeah, post it on the group page. Just come into the comment section and just add it as a comment.
Okay. Sounds.
And
All right, everybody have a great night.
Yeah.
All right.
I think that's it as well. I'm gonna go ahead and finish cleaning up these charts. Sorry I didn't go through them all on the session, but it is, if y'all knew how slow this thing was going, and it's finally starting to speed up, of course. But I done unplug everything on here. I'm using one screen, all kind of stuff. So I guess I'll just like I said, I'll go ahead and post the rest of them in the group, but I would love for y'all to post y'all markups on there and see if how well y'all interpreting this, right? And again, study this VIX setup, right? Study the VIX setup, right? I have done a lot of back testing on this and gone through this in a lot of different scenarios, and it's lining up every single time. Every single time, right? I can show you so many examples of how this is carrying over into NAS and into S&P and into Dow. So you can see like some of the markups of recent, like like on this day in particular, right? All right, later, cuz. In this day in particular, we had a gap, we traded in the gap, we wicked below the low, we had another gap on the open. That was Friday the 16th, right? We had a gap to the downside on that first 9:30, 9:15, 9:30 candle. We gapped down. We pushed through the gap. We traded above this, and then we retest the gap and then push higher. On that day, we sold off very big, right? And then we took out this 1602 high. We set this high at 1629, and we took out this high. I can show you exactly on that same day, we did the exact opposite of that on Dow and NQ and on ES. So on the 16th, let's look at S&P, the 15-minute. That particular day was over here. So you saw we pushed up on VIX. That was here, right? The gap that we pushed up and through lines up with this fair value gap. We push down and through, trade back into the fair value gap. At the same time, VIX is trading down into a gap and it's holding the gap and it's creating a low. We getting a low on VIX while we getting a high on S&P inside of a bearish point of interest, and we selling off. Remember, VIX took out that high. VIX took out this low. That line up with that first low we took out. This low line up with the second low, and this line up with the last low right? The last high we had. Let me put them side by side. Right. Let's put them side by side.
I'm doing this, but sometime like when um, MNQ and MES in both different direction, then I get confused. Then means situation is not very clear to me. I'm
Gotcha.
doing that back test. Let's see how does it. Yeah.
Yeah, I understand.
Mhm.
So this low right here lines up. Let me see. We on 15 on both. This the same day, right? We got our high here. This is the low we made here. We got our lower high right here. This is that low right here. Then we got our low on ES right here. That's where these highs come into play right here, right? On the open at the 9:30 candle, we gap to the downside, right? And we create a gap right here, right? We trade through it. At the same time, we trading down and into that gap. We're trading up and into this fair value gap on ES. So you know now, right? If VIX trades through this low and trades through this gap and it rejects it to the downside, we should be taking out this low and going after any low outside of that, right? But instead, we hold it, right? Because we holding it, that lines up with us staying and rejecting this, right? So if you see we at 2 points of interest, opposing points of interest at the same time. Here we're in a bearish, here we're in a bearish, but it get inverted, which make it bullish over here. So now you got your confirmation to say, hey, this is going to push up higher because we rejecting this gap right here. And we should take out this high. We should take out this high. And we should take out this high over here. So just like we had that short-term high, there's your short-term low. Once we come in here and we reject, we should take out this high. That's the first high right here. We should take out this low. That's the next low high right here. Then we should take out this high. That lines up with this high over here. I mean, this low over here. And then what do? We fail. After we fail this 1626, we reverse. And that's exactly what happened right here. And then what do? We set this low at the same time we got this high. Once we start to stall out, we got this little high right here. We got this little low right here. We stall out over here. We got this little low right here. We got this little high right here. And it should always be like that. What's up, Wale?
How you doing? I didn't want to interrupt.
It's okay.
Monday, uh, uh, Nasdaq was dropping. Everything else was bullish, right? So
Monday.
yes, so I'm hearing what you're saying, but and you're accurate. But my thing is, what are the how can I say it? How do you go into trades with that dichotomy, right? Like, how do you use the VIX even though everything tech sector wise, that whole sector went under, right? So how do you use that same information that you're talking about right now when a whole sector goes?
Man, if you had got on earlier, we went over it.
All
But
right, sorry.
it's okay. Monday, right? This is Monday. This is Monday right here. And Monday, if we're looking at NQ and let me go to the 15 minute. This is Monday. So Monday, we actually bought, right? Monday, February 2nd, we actually bought, right? If you look at Monday, February 2nd on VIX, what do we do? Hold on. Monday, February 2nd on VIX, right? We did exactly the opposite, right? So here's the opening, 315 open, right? You even get inverse correlation on the gaps, right? Watch this. You can see we closed on Friday right here. We get a gap down on ES and on NQ, right? We get a gap down. What do we get on VIX? This was the close on Friday. We get a gap up on VIX, right? And looking at VIX, right? What do you expect, right? If we get a gap up and we're going to stay bullish, right? We need to reject it and push higher, right? We just trade through it, right? We never hold inside of this gap. We just come to the middle of it right around here. We create an order block. And then on the 9:30 opening, we gap down. And we don't ever come back into this gap. We don't retest this gap. We just fail it and keep going. Same thing over here. We got at the same time, VIX is making a price gap on the 9:30 opening. NQ and NASDAQ, NQ and S&P are making a bullish fair value gap. And guess what happened? We don't trade back into it, just like we didn't trade back into it here. And we just keep running higher. On the next day, right? This VIX on the next day. So this is Tuesday. right? We looking exactly the opposite, right? You got a gap on the open right here. You don't get the gap on the open, but what do you get? You get a bullish engulfing candle. That's a fair value gap right there. So instead of getting the gap that we got on VIX, you get a price gap on VIX. You get a fair value gap on S&P and NASDAQ, right? Then on VIX, during the London session into pre-market, we stalling. What are we doing over here on VIX, on ES and NQ? We stalling near highs, right? Then on the 9:30 open on Tuesday, what do we do at the 9:30 open? That's what you want to pay attention to. You want to watch the 9:30 opening. And if we are going to, we're near highs, right? We're near highs, and I don't remember all the catalyst information on Tuesday, right? But we're near highs, right? And if we are going to stay high on S&P, we're going to keep pushing higher. This gap that we just traded through, then created on the 9:30 opening, it needs to hold below 1619 to take out 1605. If we don't do that, this is going to be used to push higher. And if it push higher, we know we take out this low at 1638. That lines up with the low at 7007.00. If we take out that high, we should be aiming for 1663, which lines up with these lows over here at 6997.5. And then if we keep going, you're just going to look out. All right, we had one right here. That's that low. That's another. We set a high over here. There's an order block over here, right here. We should come down into, it looked like we came down into this fair value gap. But either way it go, you know, if it invert this, it should go higher. Gaps and trades below 1609, we should push up further. And in this case, we push down because we pushed up, right? You look at today, and what, right? It was the same way, right? I already had something right here, right? Then we had a fair value gap right here, right? We had a low. On the 9:30 open, we didn't gap. We gap on the 15-minute, but not on the 5-minute, right? But we had this area right here. Just like on ES, we had something bearish right there. We had something bearish on all three, right? Something, right? We had an inverted fair value gap that should have been bullish. They end up being bearish. We had a fair value gap to the downside, right? So now you're telling yourself, we got divergence. We got a high and a lower high. We got a high and a higher high. We got a low and a lower low. And if we're going to be selling on NQ, then this should go higher. If we're going to be buying on ES, then this bearish area should hold true. It should take us below this to take out 1747. If it doesn't do that, then we know that it's going to trade above this bearish area, use it as an area to buy from, and then we'll take out this high and we'll take out this high on the lower time frame because we were looking at it from the 5-minute. And then there's probably another high and another high. That's exactly what ended up happening. We pushed up above this fair value gap, traded back into it, used it bullish, and then we went higher. It's three things that the VIX tell you. It tells you timing, when you can get in your trade. It helps confirm direction. when you got a bias, this helps you get the extra confirmation you need to confirm your bias. And then the last thing it tells you is how long you can stay in a trade. You should see if you're in a buy on ES, you should be selling on VIX. If you are near a swing low on ES, or I mean a swing high on ES, you should be taking out swing lows on VIX, and vice versa. And as long as you're taking out, in our case, we were selling. So as long as I'm seeing VIX continue to take out lower highs, continue to take out highs, then I should be seeing S&P and NASDAQ do the same thing. And they should be lining up with it, right? So in our case, like using this on the 5-minute, right? So once we took out this 1827 high, we should have been looking at this little high right here. This at 1836, 37, 38 high, right? And in our case, well, the first high, the other high is 1836. We took it out right there. That line up with us taking out these lows over here and continuing to go down. And that's the way you want to look at this in correlation. And for what I was telling them is I like to look at the 5-minute on VIX because there's a pause on the 5-minute. There's a new session on the VIX at 9:30, and at 9:30, that's going to give you what your best information on the 9:30 to 9:25 to 9:30 candle, right? There's going to be that pause, right? And they open up the new session. And that's going to tell you, right? Hey, in this case at 9:30, you won't see no candle movement until the 9:30 candle is finished. That give you what you need to know. Then after that next candle, the 9:35 should confirm whatever the 9:30 candle information just told you. And then if all of those are in line, that should give you confirmation for whatever trade you need to take. Or if you need to wait until the 10 a.m. candle.
I'm not even gonna lie to you. Today was an interesting day. I normally don't I normally don't trade ES and I don't trade lunch, but it's set up for me at lunch. And my Lord, I wish I would have stayed into that sell.
Everybody wish they had stayed in that cell today.
Oh my God.
I don't know a person that don't wish that was in the cell.
Oh my God. I was screaming at the screen. I was mad because as soon as I saw the setup, I was out the setup.
Yeah.
And I should have moved. I needed
To the trail.
No, I didn't even need a trail. It just went to where I needed to go. Because I have I'm in a different situation right now because I'm very tight with everything I'm trying to do. So yeah, but it went to my overall goal. So what I'm trying to figure out, because the VIX is cool, right? Understanding the news.
Cool. It's not cool. It is the shizzle. It's it. Like it's the missing piece.
So so we're always gonna see things a little different. For me, I don't like this whole area that we're in. That news that you were talking about was a drone getting shot down by from us to Iran, and then everything reacted. Then Epstein file stuff started happening. There was another reaction. There was a questioning of the AI and storage. Another reaction happened. That was Monday. So news to me is dictating a lot. So I don't know how they're using the VIX and news, but it's getting to the point where I'm going to have to be very patient.
The VIX is telling you the volume. The VIX is telling you where the volume lies in the market. Where is the direction of what's the direction that the market is trading in, right? And you take that information, it don't matter what the news is, right? Because if they are removing volume from the market, that means that gives the room for the indices to push higher. If they're adding volume to the market, that is when typically the market will fail. That's the easiest way and the simplest way to understand the VIX. Like, you don't gotta understand it no more than that. The only other thing after that is just understanding price structure after that. If I see a gap on VIX that's bullish, I should see a gap on S&P and NASDAQ that's bearish. If I see liquidity that's buy side on VIX, I should see liquidity that's sell side on S&P and NASDAQ. And if I'm bearish on VIX, then I should be bullish on those, and then I should see S&P taking out buy side liquidity. I should see NAS taking out buy side liquidity. If I'm bearish on VIX, I should see that all of the highs and lows that I'm expecting, all of the highs that I'm expecting for NQ and ES to get taken out, right? If I'm pushing down, if I'm pushing up on VIX, I should see the opposite. I should be seeing selling on the indices, and any sell side liquidity or any bullish or point of interest, I should be trading down into that if I'm bearish on it, if I'm bullish on VIX. This dude asked me that question and then got off. Okay. All right. I'm gonna call it a night, man. My throat dry. Anyway, I will post this. And like I said, I'll post the rest of the charts once I get over it. I probably need like about 30 minutes and I'll finish doing the charts. So hope y'all guys got a lot out of this. And I'll catch you guys. I'll hopefully by the time Sunday come around, I'll have this thing figured out. And then also Sunday call, it'll be at 4:00 on Sunday. It'll be at 4:00 because the Super Bowl starts at 6. I don't want to take nothing away from nobody that want to see the Super Bowl. Plus, I want to go hang out with my friends and watch the Super Bowl with them. So it's gonna be 4:00 on Sunday.
Maybe I'll not be available on Sunday.
Okay.
Somebody's coming at home. So
Say that again.
somebody's coming at home.
Oh, okay. You my buddy won't be on. Okay. No problem. Okay.
But I'll try to make it, but I'm not 100% confirmed.
No
Yeah.
problem. No
Mhm.
problem. All right, y'all. Catch y'all later.
Okay, bye. Good night.
Night.
Good night, everybody.